Hi, I'm Stephen Ju, Portfolio Manager at Voya Investment Management. The recent volatile market conditions are mainly tied to concerns over higher inflation, trajectory of interest rate hikes, and whether tighter monetary policies from central banks can reduce inflation without causing a sharp slowdown in economic growth. We believe these concerns are now discounted by the market. Central banks have broadly telegraphed an upcoming series of interest rate hikes to moderate growth and slow inflation. While it's likely the tightening monetary and fiscal conditions will slow U.S. GDP growth, we believe companies and consumers are well situated to ride out an economic soft patch given record low unemployment and healthy balance sheets. Although central bank policies alone cannot solve supply chain inflation, we are observing some gradual improvements in supply chain constraints that should help alleviate some of the cost pressures. Recent data points include freight prices starting to moderate, easing semiconductor and component availability, and reopening of the Chinese economy from the recent zero-COVID lockdowns. Our view is that as central banks proceed along the stated rate hikes and economic growth moderates, inflation should gradually return to more normalized levels and market volatility should subside and return the focus to company fundamentals. The surge in energy prices contributes to the upward pressure on inflation. Overall, the rise in energy and commodity prices was a tailwind to the fund year to date until the last few weeks when concerns over slowing economic growth and higher risk of recession resulted in some profit-taking. The first half of 2022, our exposure to key companies benefiting from higher energy and commodity prices in themes such as alternative fuels, energy storage, renewable power sources, and efficient materials and chemicals helped performance. Our positioning in some long-duration growth companies underperformed amid the rising interest rate environment. Overall, the Innovative Decarbonization Fund continues to maintain a balanced positioning to navigate through volatile market conditions. In response to the global energy market disruption caused by Russia's invasion of Ukraine, the European Commission called for a rapid phase-out of Russian fossil fuels and an acceleration of the European Green Deal presented in the new Renewable Energy Power EU plan unveiled this past May. The European Commission plans to cut imports from Russian gas by 66% by the end of this year and break its dependency completely before 2027 by saving energy, finding alternative sources, and speeding up the transition to renewables. Within the Innovative Decarbonization Fund, we are positioned to benefit from this trend to energy security through our positions in areas such as wind, solar, battery storage, energy services, renewable fuels, and liquefied natural gas. For example, we own SolarEdge in solar inverters, Enphase in energy storage, Vestas in wind turbines, Valero in renewable diesel, and Cheniere and Chart Industries in liquefied natural gas. The fund could also benefit through key enabling materials for the energy transition, such as Albemarle in lithium and Freeport-McMoRan in copper. While we have seen some profit-taking in these names recently as the market worries about a recession, we maintain these positions in the portfolio as the long-term fundamental backdrop remains very constructive. We continue to maintain a balanced portfolio of innovative companies that have both secular and cyclical growth characteristics, helping to fight climate change. We are still at the beginning stages of a multi-decade path towards a new carbon-neutral economy. Meeting this lofty aspiration will require a tremendous amount of investment over the next several decades. Companies that successfully create such decarbonization innovations will be clear beneficiaries from a revenue and earnings growth perspective, as other industries leverage these solutions to shift their operations towards carbon neutral. Although the innovative decarbonization team was transitioned to Voya Investment Management in July 2022, there are not any material changes to the investment policy, team structure, etc. The research and trading process also remains unchanged. The team will continue to focus on identifying companies that enable the multi-decade path towards a carbon-neutral economy and remain committed to generate the best possible performance. We hope that individual investors will continue to invest in the fund from a long-term perspective. Thank you for watching this video.